Boom. All right, welcome in, y'all, to our Margins Masterclass. I'm Dr. Alex Zangar, your profit doc for the day, as we dive into understanding how do business margins really work, what are they, how do you calculate them, and at the end, I'll give you a really solid resource for how do you improve your margins. Most of you are on here today because you're the cream of the crop of business owners. Most people do not want to sign up to think about numbers. That's like the last thing from most people's minds. Is I just want to go make sales. Maybe I need to make some hires, but I don't want to think about the numbers. It tells me a lot about the integrity of how you're thinking about your business by you showing up here. And if you're on here live, thank you for being here and sharing your camera, because we're going to get into some stuff. Those who share their camera get more out of this because I get to use your numbers and call on you and ask you questions. And I promise that you'll get more out of it by being fully present. Okay. If you're here on the replay, grab a calculator and probably a profit and loss statement. It's best if we have either a 6 month or a full year's worth of P&L. So you can do like last 365 days or year to date, and we'll get more accurate numbers as we go through this, and we'll see why in just a minute. All right, let's dive in and get rolling with the actual video side of things. Hopefully you can see me on the camera. If you can see the screen, will you just thumbs up it for me so that we can? All right, John says yes, beautiful. I should be able to pin myself, and not because I am a narcissist. All right, there we go. But because I think this is the only way you can see it. All right. So profitable scaling series, Margins Masterclass. We've done a number of these over the past couple of months. If you want more of them, we have an entire page with all the replays. Okay, we've been doing a huge amount of content for y'all. And the goal is that you learn 3 things. Number 1, what are gross and net margins? Number 2, how to find them. And number 3, I'll give you a resource at the end for how to significantly improve them, with the hopes that you feel like, man, this free stuff is so good. I wonder what it would be like if they actually helped me and I maybe even paid them some money to sit down and do this one-on-one with me. That's what our business is. And we're more than happy to just give away a lot of the methodologies and the hows and show you we know what we're doing. And the real value comes when you have someone sitting down to help you figure this stuff out on your own. So you might be saying this. We've got a couple of different buckets that people fall into when they come to work with us. One is that they grew their business so fast that now they can hardly afford to pay themselves. We don't like that. It's not fun. Nobody wants to be in that scenario, but a lot of business owners find themselves there. Number 2, I have so much revenue coming in, but I don't know where all the money's going. You know, as you're scaling quickly and expenses might get out of control a little bit, you might find yourself one day waking up and saying, man, my P&L says I've made $1 million. Where is it? Again, not a fun place to be. Or the worst one, I'm my lowest paid employee. You do not want to be your lowest paid employee if you're the owner. And we unfortunately see it all too commonly. The other side of the equation is we see people who are actually doing really, really well, who are making a lot of money, keeping a lot of money, but don't really understand what's happening that's making that work or what they should be doing with that. And those are the people that we ultimately help. So we don't want you to be that owner. Instead, we want you to be an empowered owner that takes actual ownership over your business. And from the quick version of who we are, Will, my business partner there on the left, and I are actually both former physical therapists. So we approach finances very much from a medical standpoint, meaning I want to come in and give a diagnosis as to what's actually happening. Because we were physical therapists, PTs are not big on just willy-nilly prescribing painkillers. When you come in and you say, this hurts, great, here you go, I'm sure this will work for you. Instead, we would sit down one-on-one with patients to figure out what's really causing the problem and how can we not just find a band-aid solution. And that's what we do in the financial space as well. We have a number of amazing team members. Scott, our head of sales, who if you decide to talk with us, you'd be speaking directly with him. He built and sold his own pest control company to the tune of millions of dollars. And now said, you know what? I want to help business owners master this financial side as well. And then our actual profit coach, we're hiring a number of them now. First one, though, built and sold a dental practice from 0 all the way up to 12 million a year. And we're a team built by business owners who understand what it looks like to make financial decisions that impact not just the business bank account, but the entire business growth and ultimately your bank account as the owner. So today we're going to talk about the 2 kinds of margins that you might experience in your business. If you run a product or service-based business especially, you need to understand both of these. A lot of times we just focus on one and kind of leave out the other. But we're going to be talking about gross margins and net margins today. With the first thing, understanding that there's a big difference between profit and margin. So what do I mean by this? Well, profit is a dollar amount, okay? It's a firm number. Margin is a percentage. And so we're going to look at each of these in concert and how they affect each other. So the first one is we're looking at gross profits and gross margin. Let's first look at gross margin and how we calculate it. So this is where you might want to get a profit and loss statement out for yourself, pull it up on screen, have it printed out, and let's go through some actual numbers here. At the very top of it, you're going to see income, and then you're going to see this line called cost of goods sold. If you sell a product or you have people who are working directly for you fulfilling on a specific product or service, you might have this cost of goods line. Now, if you run a PT practice, I know we had a PT in here, you might not have a cost of goods line, and it might just be zero, okay? But we often abbreviate this as COGS. So as you're hearing people talk about financial numbers, that COGS acronym is an important one to know, okay? Cost of goods sold. So we take our income, we subtract out our cost of goods sold, and that cost of goods sold often falls into two categories. Sometimes it's broken out a little bit more, but it's usually into, if you run a product-based business, it's the materials that you actually use to build the product, and the direct labor, or the people who actually perform the service or build the product, okay? So we're not talking admin labor and office labor and not even your own owner labor usually, but direct labor they call it, okay? So direct labor and materials, and then that gives us gross profit. So income minus COGS equals gross profit. Now, gross profit is a dollar amount. So it's a physical, it's $500, it's $1,000, it's $20,000. So let's look at what this actually looks like here on a P&L. So if I pull up, this is for a construction-based business, we can see a couple things. Number one, their income here. And then this specific business has it broken out into, a bunch of different categories. We're looking at things like, hey, for every job, we might need to have a blueprint. We might need to have some equipment rental. We might have other job materials and subcontractors or the people, right? And so then we get total COGS, right? Total cost of goods. So we have our little formula here, income minus cost of goods sold equals our gross profit. And let's do the actual numbers here real quick. We'll see an example, but it would be income of 190 minus the 30,000 gives us our gross profit of 159, okay? This is all probably pretty basic for most of you who are running this kind of business. If you see this, it's like, okay, yeah, I get it. So now let's look at a little bit of a different kind of business. This is a more product-based business. We would see a direct cost of goods sold line up here, and we might have supplies and materials, right? Now, quick hint here. If you do run this type of business and you don't see the correct expenses listed up here for your materials and labor, talk to your bookkeeper. In fact, we did an entire Better Books checklist workshop about 2 weeks ago where we dove deep on what do you need to look at within your profit and loss statement and balance sheet to make sure that you're seeing this right. Because I have a lot of owners who, when I sit down, we say, hey, what are your gross margins? We calculate it. And then they say, gosh, that looks way better than I was thinking. And that's a red flag to me. It means that we might need to go in and see, is your bookkeeper actually breaking these things out right? And I see this happen all the time where they don't, and it makes it so that we can't make correct financial decisions or projections as you're looking at the business. So we want to get those right. So gross profit is the dollar amount. Gross margin is the percentage. So let's look at the gross margin now that we figured out gross profit. By the way, is there a PDF or slide after this is over? Yes, in fact, we can send you the entire sort of PDF slides if you want. You're welcome to have that. So let's look at gross margin here. Gross margin is that gross profit, the dollar amount, divided by the total income. In other words, it's what percentage of my money do I keep after all of my direct costs, my cost of goods sold. That's gross margin. So I want you to look at your profit and loss statement here for a minute, and let's calculate your gross margin. I want you to literally calculate this right now, and you can send it over. You don't have to post it publicly. I know sometimes we don't love talking about numbers, but you can send a private message actually in Zoom. So if you go to the Zoom chat and you say send to Alex Engar, you can send it to me directly and no one else will see it. Cool? I want you to sit down and do this right now. What is your gross profit divided by income? And that gives us our gross margin. So in this example, if we look at this, we've got a gross profit of $159,000. And we divide it by our total income, okay? In this case, this gross profit is 84%, which is ridiculously good. We'll see why in just a minute, okay? But I want you to figure out, what is my gross profit? and then gross profit margin. Cool. We got our first one in, 59%, very solid. I'll just tell you, it gets really hard to run a business if your gross margin is any less than about 30%. It gets really hard. You have to be a very high volume business in order to do that. And so you really want to watch this, and we'll see the power of gross margins here at the end. There's some really cool stuff around this. We've got a 71%. Awesome. Those are very healthy gross margins. We can make that work. In a lot of retail-based businesses, we hover around 50%. And once we start getting much below 40, it starts to get pretty hard. If you're below 30, like I said, it gets very difficult. And we have to be very, very high volume business. So in a product-based business here, I might look at this and say, hey, I've got my actual gross margin here, or gross profit of $56,000 divided by my 71 gives me a 79% margin here in a product-based business. Very healthy margins, right? Very healthy. So now let's see that we understand this. There's a little bit of a problem going on here. And you might say, well, what's the elephant in the room? Well, I want you to look at these for just a second. I know this is kind of small. I'll zoom in here just a little bit. Strain your eyes just for a second. See if you notice the difference between these two. This is the same business, same month. Okay? Same business, same month. We notice some kind of important differences here. A lot of business owners don't know how to look close enough at this to catch this. Over here, revenue or income, $190,000. Over here, $208,000. What? Same business, same month, right? Over here, our gross profit, $159,000. Over here, $181,000. And down here at the bottom, $90,000 of sort of net or total, and $112,000. What's the difference? Oh my goodness, how is this happening? Well, if we look up here, here's the answer. This is a cash basis, and this is accrual basis. Now, we're not going to get into the deep differences of cash versus accrual today, but if you run a business that sells a product, or especially if you're in a business that has a longer fulfillment cycle, this is for a construction-based business, right? Fulfillment takes months, if not a year, in this kind of business. Then we really want to be careful with how we're measuring our margins and what kind of books we're looking at. Because it might be nice to know, well, is my gross profit really 159 or is it 181? That's a pretty big difference. It's, $20,000. And so when we're looking at margins, you want to remember that accrual accounting is more accurate for calculating margins. Now, if you don't know the difference between cash and accrual, or you're only seeing cash P&Ls, you can always ask your bookkeeper or your accountant. It's actually more of a tax question than anything, because you do report to the IRS which one you're using when you file taxes. But for looking at margins, accrual is more accurate. And we'll just leave it at that for now, okay? But then let's look at something else here. Different business. This is a manufacturing business. And we can see a couple numbers here. So I just went and I calculated gross margins down here, month by month. What do you notice about these numbers? Right? Here's what I notice. I'm a visual kind of guy. If we graph it, that's a lot of up and down, isn't it? And you say, well, is my margin 58%? Is it 43? Is it 70? Is it 23? Is it 47? You know what I think about every time I see this? I just superimpose a roller coaster right on top of it. And it's both a financial roller coaster and an emotional roller coaster as a business owner. So I'll be honest, I'm not leaning too heavily into gross margins on a month-by-month basis, especially in a business like this where we have such different numbers month to month. And we'll see this pop up again a little bit later. So instead of looking month by month and having my blood pressure rise and fall every time I see these numbers, instead we're looking at totals. So this is over a 5-month time frame, and we can start to see a little bit more of a clear picture, an average of where we're really at. So for yourself, to avoid this up and down craziness, instead, I want you to use at least 6 months of data, and if not, 12 months is even better when you're looking at your real margins. And the reason 12 months is better is because then we cover a whole year worth of ups and downs and changes in the seasonality of your business. We have a lot of owners who sell a lot during the summer and then nothing in the winter, or vice versa. It's like, well, what are your margins? Well, realistically, it has to encompass an entire cycle in your business, and that cycle might be a full 12 months. We just get better data the longer out we can go. Okay. Now, if I go back too much more than 12 months, I start to get into pricing differences because the inflation's been so crazy lately. 18 months ago, pricing might have been totally different and my margins would look different. Okay. So I don't like to go back too much further than 12 months. So now we covered gross margins. Now let's look at net. So again, we got to look at net profit versus net margin. Hopefully you're starting to see the difference here. Profit is a dollar amount and margin is a percentage again. So let's look at this. Here's the formula here for net profit. Really simple. Income minus all of our cost of goods minus all our other expenses gives us our net profit. It's what do we actually keep at the end of the day. Now, if you've caught on from our other workshops, net profit is not the same as cash in your bank. You'll have to go watch our profit levers training to see why. But net profit does not always equal the cash in your bank. It's really important to know where your money's going. But at least on the profit and loss statement, we do want to see where our net profit's coming. And this is a really important number because this is what you're taxed on in the business. When you go to pay personal income taxes, if you run an LLC or an S Corp, you're taxed on that net profit. That is what they're going to say, oh, that's how much you made. So it's really important that we both understand this and know how to affect it. So net profit is a dollar amount. And let's calculate that really simply, right? If we take our total income minus our cost of goods minus all our other expenses, that would give us our net profit. On the P&L, you'll notice that it's called net income. I don't like calling it net income. That just feels weird to me. Profit makes a lot more sense in my brain, but it's always represented there, bottom line, right? So when people say bottom line, they're meaning net profits after everything's taken out. And there's going to be questions on owner compensation around this. We'll talk about that in just a minute. In fact, get your questions fired up. Feel free to ask them in the chat. We've got a couple questions going on here that I'll get to at the end. We'll have time for a little bit of Q&A before we wrap up. So in a product-based business, same thing, right? Income minus COGS minus expenses equals net profit. And we always see that bottom line right there. Cool. So let's talk about net profit versus net margin now. This is the number that most businesses will talk about, most investors will talk about as well. And so it's good to be well versed in this and kind of understand the difference in how this math works. Okay. I know today's a pretty math heavy day, y'all. I don't love the math, I'll be honest. I like pictures, which is why I did this stuff in as visual a format as we could today. But I'll just say this stuff gets confusing, which is why you should have someone sit down with you and go through it. Maybe it's your bookkeeper. Maybe it's your accountant, but I can almost guarantee you that right now your bookkeeper and your accountant aren't sitting down with you on a monthly basis to make sure that you understand the math and, more importantly, understand how to make decisions based off that. And that's where we come in. That's exactly what we do in CEO Finance Academy. It is a financial education program where we sit down together, help you understand what the numbers are, and then understand how to make decisions off of it. But this is a big part of what we're looking at every month. And then on a bigger basis is what's our net margin. We'll look at healthy margins in just a minute. But the formula is really simple. What was my net profit divided by my income? In other words, out of all the money I made, what percentage of it do I keep at the end of the month? Okay. So if we're looking at a construction-based business here, right, really simply, here's our net income divided by our total gives us my net margin. Now, I don't know why bookkeepers don't default to just having this put somewhere in their report. It's really easy to calculate. We use dashboards. So we build these really nerdy, very cool dashboards that allow us to see at a glance every month, hey, what's my net margin? What's my gross margin? And how is it changing over time? How is it changing quarterly? And then I like to compare it to last year so that I can make a real story out of what's going on in my business. But right, super simple here. 90,000 of net profit divided by 190 of revenue gives us a ridiculous, this is just ridiculous, 47% net income. Now, I can tell you that is not sustainable for almost any business unless you are an online business, which some are. We're around that level because we don't have gigantic overhead as an online business, right? But for brick and mortar businesses and manufacturing especially, we're not hitting this on a monthly basis. This was a very high month, and I can almost guarantee that if we looked at the next month, boop, it'd be way down, right? So I didn't cherry pick this to show you, look how great we are. Full disclosure, this is just a good month. I just happened to pick a good month on this one. I happened to pick a good month on this one as I was looking back. It's like, man, I should have gotten some realistic numbers where we're sitting at like 2%, right? Or we have a loss, which does happen for businesses. But in a product-based business, same thing, right? Here we're sitting at 57% net. Again, ridiculous margins. This owner does have a ridiculously profitable business, but we're probably sitting at more like 20 to 30% net on this business, but it is what it is. All right, now let's get into this example again. So going back to our manufacturing business, remember how we had that up and down, up and down? If we zoom in on their net incomes, we see something else here, right? We notice that there's a little bit of a change going on here that we kind of don't love, right? It's kind of like, ooh, whoops, I can't quite, let's see. I don't know if you guys can see this. Hopefully you can. Well, at the bottom here, we'll zoom in like this. These are what the numbers look like. This is their net income. And again, what do you notice here, right? Very seesaw. In fact, it's very common to see, especially in construction and manufacturing type businesses, when they have big orders, their revenue goes up and therefore their net income goes up, and then they fulfill on that and it goes way down. And then we get more orders and then we fulfill. It's very common to have that up and down seesaw. Now, again, I look at this and I map this just completely to this, right? It's like, this is just a complete roller coaster. And so how do we ultimately smooth that out so that you as an owner don't say, great, I pay myself a bunch this month, and then I don't. And then I pay myself a bunch, and then we don't. That's what our whole goal is as a business. We sit here and we say, let's take that curve, and instead of having the emotional and financial highs and lows of this for the business and your family, why can't we find a spot where we can pay you consistently every month and absorb or buffer that up and down? So functionally, that's what we're doing with clients. We're figuring out where is that level for you with your specific business and your specific numbers so that you can take a consistent paycheck every single month. And then at the end of every quarter, we can look back and say, yeah, I had the up and down, but I had enough up that I can go take a big owner's bonus every quarter while I've gotten consistent owner salary every month. And I'll just tell you, for my wife, that was a huge part of the buy-in to us going full-time in the business. And for the bank who said, yes, Alex, we will loan you for that construction loan so that we could build our house, they like seeing that too. So as we look at this, cool, you can see it. It's small down here, but again, I'm not measuring net income on a month-by-month basis to tell myself this is where I'm at. I'm looking at it over time. Now, I do look at it every month just to see, but the emotional toll of that on most owners is just too much to put much emphasis onto. So again, I like looking at 6-month and even better 12-month timeframes on this. All right, so real quick example here. This is so powerful as we end up. If we look at an example where you have $100 for every $100 of income that comes in, we have $60, let's call it, of cost of goods. Okay, so that would be $40 of gross profit or a 40% gross margin. And then we have 35 of expenses. We're only left with $5 after all's said and done. Now, that is not a hyper profitable business, right? 5% net margin. Let's look now. What if we make one change to our cost of goods and we drop it from $60 down to $57? Okay, so I've only made it's a 5% change in my cost of goods. But look what happens down on the bottom line. Every dollar that I save in cost of goods goes straight down to my net income or my net profit. And so now making a 5% change up here, let's look at what that does down here. Well, for the 5% that I changed under cost of goods, it is a 60% in this scenario change in my net margin. A 5% change up here brought me a 60% increase down here. Now, did I cherry pick these numbers just a little bit to make this point better? Yes. However, the point is for your business, as you focus on, number one, driving down expenses, and I'm not even going to say driving down, I'm just going to say being intentional with expenses. And then we really control cost of goods. And there's a number of ways we do this. We have these 9 profit or cash flow levers that we control in the business. We have an entire training on that we can give you. By the way, if you want it, will you just comment levers down below and we'll send you the free training. And we look at how do we change this both at the cost of goods level and at the expenses level. And then finally, from a cash flow standpoint, how can we make sure we have the cash flow we want? Yeah, I thought a lot of you would want it. It's a good one. Then ultimately we end up with all of that bottom line, okay? So what's next for you? If you were like, whoa, this was insightful, useful, might feel a little bit overwhelmed, but I know that I can understand this stuff better now as a result, I want to invite you to book a one-on-one profitable scaling call with us and our team. Now, the cool thing is this first call together is a 15-minute, let's figure out where you're at in your business and have nothing to sell you kind of call. We can see a couple major things. Number one, where do you need to be focusing next in your business? Is this a place where you need to just go focus on marketing? You need to market the crap out of what you're doing and focus there. Maybe it's a, you know what? It sounds like it might be a hiring thing for you and we need to go expand your capacity. Or it might be a financial management thing where it's like, yeah, you got to learn how to go do finances and make sure that you can understand the numbers so that as you're scaling, you're keeping what you're making. And if that's the case, if we decide together, hey, it actually might make sense to really focus on your finances right now, then we'll say, hey, let's look at what it looks like to work deeper together. And when we're working with clients, I didn't give examples today. I should have given examples of changes we've made, note to self. But we're able to come in, get really nitty gritty with figuring out where do you need to focus your time, energy, and resources so that you can make the changes that actually make a difference to your bottom line. And at the end of the day, there's a lot of different things you could go do in your business, but there's a couple things that you should do. And our job is to help you learn how to identify what those should do nexts are so that from a financial standpoint, you can keep what you want and grow while you're actually staying more profitable. And that's completely possible for most businesses. And that's exactly what we do in CEO Finance Academy. So Will is going to drop a link right now, if it's cool, Will, if you're able to. Will's going to drop the link to our team's calendar. And you're going to be talking with our team around what do we need to be focused on next in your business? Again, you're talking with people who understand business at a deep level and want the best for you. We say no to most people who come through our doors because we're not a fit. And if we're not a fit, we like to point you towards what's the next best resource. And I'll just tell you from a who's a fit standpoint, we usually work with businesses who are at a baseline of $250K in revenue up to around 10 million. And if you're under that, we're going to point you towards free resources. And we recommend that you go, actually, my recommendation would be go binge watch all of our free workshops that we've done, period. That's the next thing. And you probably need to focus on marketing and sales anyway. If you're above that threshold, then it gets to be a little bit more nuanced in the business. And just making more sales probably won't solve where you're wanting to take things next. But becoming a better steward over your finances is probably going to need to be a focus. And that's where we come in. All right. First of all, did you learn something today? Will you just put yes or no? And if it's a no, like I'll be honest, I want to know that because I want to know if these have been useful for you. Will you just put a yes or a no in the chat? Did you learn something today or no? Second, I want to get through some questions. And I know I've promised that we'd keep this to a half hour, and I did, which is fabulous. If you want to stay on for another couple of minutes, please be my guest. Rob, if you only kind of learned something, then please let me know what you are hoping to learn, and I'm happy to either adjust what we taught or point you towards a better resource for what you need next. The difficulty with teaching something like this is we get people in from all spectrums, right? We have people doing 10 million a year who have no clue how to calculate their margins. We have people doing 250K who are all over it and need to figure out what's next for them. And so that's always our challenge. It's great. How do we fit for everyone? But let's dive into a couple of Q&A posts here that we had. And then feel free, please, to type in any questions that you've got in the chat around this. Oh, man, so many good questions pouring in. All right, so first one is, by the way, some of you were sending in margins. Great job. We had some gross margins of 45% on multiple millions. Good job. Beautiful. So which is preferred for that type of business? And I'm assuming you're talking about accrual versus cash. Let's talk about that for just a minute. This is actually a tax question and a business management question if you're choosing between cash and accrual. If you're trying to choose from a tax standpoint, talk with your accountant. They're the ones who need to answer that for you. And I'll just tell you, many accountants have different opinions that if you've got a good one, ask them. From a business management standpoint, if you run a business where every order that comes in can correlate directly to some costs that are going to go out, and you need to be able to match up how much am I bringing in versus how much am I putting out for that customer, then accrual might make the most sense. Alternatively, if you're in a business where you get a bunch of money in and then it's months before it goes out, or vice versa, you put a bunch of money out but it's months before it comes in, then using cash basis, which is really just looking at what hit your bank account and what left your bank account, it's not going to do you very much good, right? And so that's where we might look at accrual. And I have business owners who file taxes based on cash, but still look at their profitability and make business decisions based off accrual. So it kind of just depends. The more advanced you get in business, the larger you get in terms of revenue, the more likely you are to need accrual. And in fact, there are thresholds where you have to from a compliance standpoint. If there's debt involved, should the P&L include both P&L in the expenses or just both principal and interest in the expenses or just interest? Interest only. We do not put principal debt payments in the P&L ever. Cool. Great question. Let's see what else we had here. And we actually have a whole workshop on understanding your P&L, what goes in, what doesn't. It's called the Better Books Workshop. You can go look at our workshop trainings to make sure that we've got that. Let's see what other questions we had. Hadn't thought about inflation versus with comparison of past margins. Yeah, it becomes really sticky. Over the past 3 years, things have just exploded in terms of costs and hiring, especially on the wages side of things. So if you're comparing your even wages last year compared to this year, it's like, yeah, you're paying more, but cost to hire good people has gone up as well. Cool. I think we covered everything. Thank you for being here today. Your next step would be hop on our calendar, talk with our team, and see if we might be a fit to help you on this financial stewardship journey that you're on as a business owner. And if this was helpful, we're doing these workshops on a decently regular basis. Next week, we're taking a break next week. I've had like 6 weeks in a row of doing these, and I need a break because we're filming a bunch of deep dive YouTube content. But thank you so much for being here. We appreciate you, and we will see you on the next workshop, or we'll see you on our calendar over the next little bit. Thanks, y'all, for being here, and we'll talk soon. Bye.